Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Thursday. It's April 21st. It's about 8:07 in the morning. The market's going to open up in about an hour and 23 minutes. And I want to apologize to you guys. I inadvertently posted yesterday morning Tuesday's video, and I didn't get a chance to post Wednesday's video till I got back from work yesterday. So I do apologize for that. I have no idea how that happened, but everything tech that could go wrong yesterday for me went wrong. Hopefully that will not be the case today. So let's get into it. We've got a lot to talk about. NASDAQ is up 181 points. Just so you guys know, we're long Microsoft and we're long NVIDIA in PP VIP programs. So we got you guys covered if you're in there. The Dow's up pretty good too, 258 points. And that's, in fact, we were at the 200-day moving average yesterday. So this is really significant and very important because now we are above the 200-day moving average. Yay! This is very big. And we're above this resistance level right here. So if we can go above instead of going down today, that would be very instrumental. Both our hands and feet crossed. I got my fingers crossed. But if you look at the QQQ, you will see that even the QQQ starting to edge up a little bit. It doesn't seem to be trickling down. And the SPY, I love the SPY. The SPY is holding on. It's at the 200-day moving average. I love it. A little bit of upside today, and we're back in play. Anything above the 200-day moving average, I will take. Now, just so you know, we had earnings the day before yesterday on Netflix. And boy, oh boy, Netflix took it under the chin. We may be in a point where Netflix is getting a little bit overdone. I would wait for it to go above the 250 level before buying it, just to be on the safe side. And if it doesn't go above the 250 level, just forget about it for now. But I would put a stop right around the 250 level and just hold on. Really, just hold on. We had earnings last night before the opening bell, or way before the opening bell, after the closing bell of Tesla. And Tesla's up 7% pre-open. And that's going to help drive the market and possibly some solar stocks as well at the expense of traditional energy stocks. There's an inverse correlation between lithium power and traditional power. So keep an eye on that. That'll be very interesting. It'll be interesting to see if Tesla gaps or comes down and fills this gap and then comes back up. But I like what I'm seeing right now. Also, as I warned you the last few days, the bond market is oversold, which means we've been getting a little bit of bullish action, just a little bit of bullish action. I would love to see price go up to about the 130, 135 level. I don't know if we'll get up there, but if we do, I'm going to sell this thing. But right now, the fact is, bonds moving higher gives a little less pressure on consumer discretionary and tech stocks, because remember, higher interest rates are the worst. They're like a wet blanket for techs and consumer discretionary. The fact that consumer discretionary, it's breaking up to the upside, that's a higher high. And take a look at tech. The fact that tech is starting to come up a little bit is very positive sign. I was fearful that we were going to come down all the way to this base, but earnings are saving the day so far. I could live to regret this, but so far, I could live to regret saying this, but so far, things are looking really positive, especially with the Dow Jones, which is the major sentiment of American, barometer of American stock trading, is trading above the 200-day moving average while we're in the middle of a war, inflation at a 40-year high, COVID ramping back up, and God only knows what else. So things are looking better, and so far earnings are not as bad as they expected them to be. Now let's talk a little bit about global economy. The situation in Ukraine remains fraught as Russian President Mr. Putin, baby Putin, tried to claim victory in the strategic port of Mariupol, even as he ordered his troops not to storm the last pocket of Ukrainian resistance in the war's iconic battleground. Markets have been focusing on corporate earnings. Thank God. We need to focus on something outside of this war to see how companies are dealing with rising inflation and cost pressure. Inflation has been pressuring a wide range of industries and increasingly squeezing consumers. But again, it's all up to the earnings season right now, mostly about 70%. Investors are also awaiting a panel discussion Thursday with the Fed. Oh, what a wet blanket. With Mr. I'm going to predict the future. Oh, wait till I won't. Jerome Powell and European Central Bank President Lagarde at a meeting of the International Monetary Fund will have it'll be very interesting to what they say. I think most of what they are going to say is priced into the markets, but who knows? Powell is full of surprises. Speaking at a forum, Z called for more stringent international efforts to combat COVID outbreaks because China's taking it under the chin right now. Rising prices have prompted Federal Reserves and other banks, including New Zealand's, to raise interest rates to temper inflation. The Fed has already announced a 0.25% point rate hike, and Wall Street expects 0.5% rate hike at its next meeting in 2 weeks. Now, here's the thing: if what's his name, Powell, backs off of this projection, the bond market is fully anticipating right now half a rate hike in 2 weeks. If the Fed starts moving away from that and says, well, we'll still keep it a quarter, we're going to rally really good, because right now the market is already pricing in a 0.50 rate hike. So keep an eye on the bond market. And remember, if we get a little bit of a relief from the bond market, it'll only relieve some of the pressure we're seeing on tech stocks. Now, as far as sectors, energy, utilities, consumer staples, materials, nothing changes around here. Look, 3 months ago, look at this. What's going on here? Who moved my cheese? Let's go to April 20th, 1 month ago. What's going on here? Let me organize, put this in. Yeah, there we go. Energy, consumer discretionary, March. Let's go back another month. Energy, communication. Let's go back another month. Energy, communication. Nothing is changing. But I'm right now really becoming more bullish on the consumer staples and the basic materials. I think energy may be, let me just show you what I'm talking about. Most of the energy market is priced in, and we're getting some upside, but notice the trend is not escalating at this rate. It's kind of trending up very slowly. We may be peaking out pretty soon. No guarantees, but if that's the case, I like the basic materials a lot, since they're almost at the all-time high right now, and I predicted that would be the case. And I also like consumer staples, XLP. But look at basic materials. Look at consumer staples and look at basic materials. Look at that. That's pretty good. So as a result, I like basic material ETFs right now. One of the ones that I'm really liking right now is global uranium. Ticker symbol URA. URA. It's looking really good. It looks like it's starting to come back in trend. I would be looking at the, let's see, January, February, March, April, May, June, July options. 15th of July, 86 days to go. Implied volatility is not all that much higher than historic. It's high everywhere right now. And I would be looking near the 27 area. Look at the open interest. You can get these for $3. I wouldn't even spread them against anything. I mean, if you really feel the need to spread them against the 35s or the 32s or 35s. But I like the 27s. I like the 27s quite a bit right now. They're not that expensive. The spread's not that tight. Global X Uranium ETF. Now, before we move on, today we've got jobless claims and Philadelphia manufacturing. Not expecting too much from the jobless claim. Expecting the Philadelphia manufacturing index to soften up a little bit. If it does soften up a little bit, consensus is 20.5. If it's a little bit to the downside, we may get a little bit of a bearish move. But if it's higher than 20, which may surprise us, then we may get a nice rally from the manufacturing sector. All in all, volatility, folks, is below 20. The Dow Jones is at the 200-day moving average. Consumer staples, I want to show you this. Consumer staples are at an all-time high. Basic materials, look at the all-time high. Hold on. This is all-time high right here, 92.30. We're at 91.34. What bear market are we in, folks? Do you see a bear market? I don't see a bear market. Folks, before I let you go, before I let you go. Markets continue to be volatile with a few earnings surprises, like Netflix missing estimates and tanking about 35% on Wednesday. The secret to finding the strongest companies in the market right now is what I call my super stock formula. Our biggest winners were selected by cutting all the dead weight out of the market and then focusing only on the top names left standing. Click the link below to watch the video on how this algorithmic strategy works. You're going to love it. Follow the link below. And tomorrow, we're going to talk about my weekly recap, biggest winners, biggest losers, what to expect next week. And also, before I forget, I almost forgot, these are the stocks that are reporting today. Freeport-McMoran, Dow, Danaher, Blackstone. There's going to be AT&T. There's going to be a lot of things to talk about. So keep your eye on this market. It's a crazy, crazy market. We're close to all-time highs on a few sectors. The sectors that I've been bullish the most on, industrial, basic material, right? Consumer staples. How long have I been talking about them? Check out Super Stocks. You're going to love it. Follow the link. If you can't find the link, it's in the YouTube Wealth Press channel in the descriptor in this video. You guys have a wonderful day. I'm liking what I'm seeing a lot right now. Bye, guys. Have a great, great day.